You're tuned in to your ultimate pit stop, Piston Pundit, where global politics, turbocharged trade wars, and shifting alliances meet the roar of the engine. In early 2025, President Trump launched a full-throttle tariff blitz, hitting China with a blistering 145% hike. But instead of putting the brakes on Beijing, it sent shockwaves through Washington's own garage of global allies. Now, with China striking back at 125%, and Europe and Canada questioning if it's time to switch lanes toward Beijing, the US may be watching its trade convoy break formation. The question is, how did we get here? And what's this detour doing to the auto world? Let's dive in. Torque and turmoil. When tariffs stall the engine. Trump's latest tariff offensive aimed to muscle China into a corner, but instead, it kicked off a domino effect that's stalling engines across global markets. On April 2nd, his administration hit China with sweeping levies on everything from semiconductors to industrial chemicals, topping out at a whopping 145%. His justification? National interest. The result? Market mayhem. Wall Street coughed up billions in market value, oil prices nosedived for a second week, and Asia's major indices suffered their worst blow since 2008. But the financial burn was just the beginning. In true tit-for-tat fashion, China countered with a 125% tariff on all US imports and a not-so-subtle invitation to the European Union. Unite against America's economic bullying. President Xi's diplomatic jab landed squarely in Brussels, echoing across the continent. His message? There are no winners in a tariff war. Translation, stick with the US, and you're signing up for economic turbulence. Now, traditional allies like the EU and Canada are eyeing their options. For the EU, Trump's heavy-handed strategy has undermined trust. For Canada, it's a signal to rethink its long-standing supply chains. Rather than risk being collateral damage, they're exploring new trade routes, and China's looking more like a pit crew than a rival. But if those longtime partners are tapping the brakes, what's actually making them change lanes? Let's shift gears and look at who's putting the US in the rear view. Canada and the EU hit the brakes on trust. Trump's tariff torpedoes didn't just sink China's mood, they rattled North America and Europe's economic chassis. Let's break down the numbers. The EU and Canada move over $1 trillion in trade with the US annually. That's $700 billion from Europe and $300 billion from Canada. But instead of partners, they're feeling more like punching bags in a political demolition derby. In Canada, the mood has shifted gears. Hopes of policy stability post-Biden have stalled. Energy exports, oil, LNG, hydroelectricity, have long flowed freely into the US market. But now, Ottawa's looking east. Talk of new pipelines, LNG terminals, and long-term deals with Asia and Europe is heating up. The goal? Diversify routes, stabilize revenue, and never be blindsided by Washington again. Public sentiment backs this pivot. Surveys show nearly 60% of Canadians now favor building infrastructure aimed at non-US markets. On the other side of the Atlantic, Europeans, especially in Germany, France, and Italy, are openly fatigued by US tariffs on vehicles, agricultural products, and tech. Internal EU documents hint at a realignment strategy that could reduce US trade reliance in favor of, you guessed it, China. Even President Macron chimed in, calling Trump's 90-day tariff pause nothing more than a weak handshake before another slap. Underneath all this is a deep-seated issue, trust. And for both Canada and the EU, that trust is running on fumes. The once dependable engine of North American and transatlantic trade is misfiring, and the repair bill could be huge. Before we delve deeper, do us a favor, smash that like and subscribe button. It keeps the Piston Pundit engine running and helps us reach more auto-savvy viewers like you. With that said, let's keep rolling and head to the next pit stop, China's strategic overtaking move. China's open pit lane, why pragmatism is beating politics. China isn't wasting any time steering into the gap left by US trade tensions. President Xi's diplomatic push, courting leaders from Spain to Saudi Arabia, signals that Beijing is playing the long game, and so far it's paying off. The EU and Canada are warming to China's advances. With Beijing dominating critical supply chains, rare earths, solar components, EV batteries, European automakers see expansion in China as a smart hedge against US instability. Many are already revving up operations to avoid future tariff turbulence. Canada, meanwhile, is eyeing China as a new destination for its energy exports. With nearly $100 billion in oil and gas revenue on the line and US trade flows under threat, Canadian officials are exploring long-term deals with Chinese buyers offering consistent, large-scale demand. Yes, there are concerns. China's record on human rights and IP remains a sticking point. But in trade circles, pragmatism is outpacing politics. The new strategy? Diversify. Reduce over-reliance on any one market, even if that means cozying up to a rival. And if the US doesn't adjust its strategy soon, it may be watching its crown slip further. Let's take a closer look at that. The US trade crown, slipping or shifting. The trillion-dollar question is whether the US can hold on to its status as the world's trade hub. Trump says yes, but Wall Street and America's allies aren't so sure. Analysts warn that even a 5% annual drop in trade with the EU or Canada could cost the US hundreds of billions over the next decade. As factories shift, pipelines get rerouted, and long-term contracts move overseas, America's grip on global commerce loosens, bolt by bolt. Recession fears are rising fast. Goldman Sachs now puts the odds at 45%, fueled by tariff turmoil. The S&P 500's 15% slide since February signals a market running on fear instead of fuel. Trump loyalists call tariffs a negotiation tactic, but global partners are no longer buying it. Meanwhile, China's pitch is simple. We're consistent. While it's no saint in the eyes of the West, Beijing is increasingly seen as a stable trade partner, one that honors deals and delivers volume. Even if the US isn't completely sidelined, the shift toward China has begun. And if Washington keeps shifting gears mid-race, allies may peel off, not out of spite, but survival. So how does this all come together? And what's the final lap look like? Let's wrap it up. Verdict: the tariff boomerang. Trump's move may have backfired. Trump's aggressive tariff strategy may have set off a chain reaction that backfires on the US economy. What began as a hardline move against China has now pushed traditional allies like Canada and the EU to explore deeper trade ties with Beijing. The real twist? This quiet pivot could reshape the future of automotive supply chains, EV battery sourcing, and global energy routes. Even without a dramatic break, gradual shifts in trade relationships could bleed billions from the US economy and hand China a bigger seat at the global table. In trying to isolate Beijing, the US may have accelerated its own isolation. For many of its allies, diversification isn't just smart, it's essential for survival. Now let's hear from you. Will Canada and the EU truly pivot toward China? Or is this just a negotiating stance? Are Trump's tariffs tactical genius or an economic misfire? How will these trade shifts impact the global auto industry? Drop your insights in the comments. We're reading every one. And don't forget to subscribe to Piston Pundit, your ultimate pit stop for vehicle updates, global shifts, and trade-driven trends. Thanks for watching, and we'll see you next time. Feel free to check out the next video on your screen. There's a lot more coming your way.